Welcome back. You're still tuned into Power Breakfast on CNBC TV 18. Let's talk about some important earnings now. Tech Mahindra reported its second quarter numbers post-market hours yesterday. Rima is joining us to tell us more. Rima, how were the numbers?
Well, largely in line with street expectations, the companies reported a constant currency revenue growth of 2.9% on a quarter-on-quarter basis. Margins expanded by 40 basis points to 11.4%. So they absorbed the wage hike, the salary increases, but still managed to increase their margins, aided by better pricing, higher utilization. That said, the constant currency revenue growth, or the growth for Tech Mahindra, has trailed peers this quarter. So on an average, the other large four IT companies have reported about a 4% revenue growth, while Tech Mahindra has reported a 2.9% constant currency revenue growth. The reason is a lower share of revenues coming in from America and a couple of verticals, and the fact that they're pruning or they're giving up some of the low margin work. So that rationalization of the tail accounts is also hurting the growth metrics. Deal wins steady, slightly above that $700 million. BFSI was a bit subdued, as I said, on account of rationalization of the low margin work. Management said they are seeing some signs of slowdown in retail and public sector spending in Europe. CLSA says margin management from here on remains a challenge for the company, but the valuations are inexpensive, which is a positive. Valuations for Tech Mahindra are at just 15 times forward multiple FY24. Nomura says Q2 is broadly in line, but the outlook is a bit sketchy. Back to you.
All right, that is about Tech Mahindra. Rima, thank you for that. In fact, let us also listen into what Tech Mahindra MD and CEO CP Gurnani had to say on why the IT giant trailed its peers in terms of revenue growth in the quarter gone by. Listen in.
I think it is just a way overall Tech Mahindra's product mix is and the geography mix is. From a geography mix, you know that we do about 49% from US, whereas most of the peers are at about 70%. The second part is from a product mix point of view, there are certain sectors which are right now relatively slower. So I would not read too much in this particular 2.9% versus 3 point some other percentage, because you have to look at the overall operations have been run very, very beautifully. And when I look at considering that we did a salary increase, we are able to increase in profitability, we are able to become better by in DSO days. Our free cash flow is one of the best in the recent quarters. Overall, my customer wins, my large deal wins continue to be 700 million plus. I think it has been a good quarter.